G'day all, Benny Reese West. I've got one of these special little episodes where I've got Chris the Red Devil in the house. How you going today, Chris?
Benny, how are you doing, brother? I'm
Yeah,
pretty
I'm good,
good.
mate. I'm good. It's early Monday morning here, so maybe a bit of a topsy-turvy start to the week. We'll just have to see what happens. But, mate, we've been trying to get this video done for a while where we were looking at the cup and handle formation that's been talked about a fair bit on Twitter. And, we can see it through the markets, especially, and CCJ, which is what we're going to look at today, is one that's showing a particularly well-formed cup and handle at this stage. So I thought we'd talk about that a little bit, just talk about the ins and outs of the actual cup and handle and see how we can apply that to CCJ. So what are you seeing here, bro? What do you got? What do you got for us?
Well, if you go from the true pure technical analyst standpoint, there's a breach here, right? Like this little overshoot wick, essentially by the letter of the law kills this cup and handle formation. I'm personally of the opinion that the psychology is still there, right? So what exactly is a cup and handle? Just in case people don't know, right? We just want to talk about it and maybe decide what we want to, how you want to approach a trading plan with this cup and handle because it's there. So it's obvious, right? We know what the cup and handle looks like. There's your cup. And the handle is this consolidation period that goes through whatever amount of time, right? There are players there who say that time at some point negates these patterns, and there's probably some validity to that. But so for the purposes of what we're doing, yes, we have a cup and handle. And what does it mean? Well, here's your rounding bottom. The right side, technically isn't supposed to breach these tops. And most importantly is that you have a bull flag formation, right? That's kind of what we're looking at now. So and what keeps this cup and handle valid? So, and this is why we have these Fibonacci retracements in here, right? So once it was able to make this pivot up here, then you can make your fib pull. So this is the bottom, this is the top of the fib pull. So a bull flag remains valid until the 50% retracement is breached. And then it becomes a lot less likely for the bull flag confirming. So you really don't want to see this 38% retracement get breached, which it did, but it was a quick overshoot and it recovered. So as bad as things seem everywhere in the markets right now, including uranium, we still have a valid cup and handle on the weekly chart, and we still have a valid bull flag on this weekly chart. So as bad as it seems, again, it's still there.
Right, yeah, no, good. I think that one thing that I looked at when I was looking at this is in Cameco it's very apparent, but in a lot of the other names it doesn't look, especially the ETFs, it doesn't look like it's forming up. Yet we can only really go off what we see, right? And what we've got right in front of us is that very apparent pattern, and until that tells us otherwise, I think that's pretty much all you can go off, because projections are one thing, but just dealing with what you can see on the hard right edge is what's important.
Yeah, well,
that's what's there.
Yeah, that exactly. That is exactly what's there. Yeah, URA. Just really quick. You can see it did have this bit of this pattern here, but look at this breakdown here. So if I ran fibs on this is going to be beyond the 50% retracement. So this is an invalidation here on this cup and handle. Not a full invalidation, but it makes it a lot less likely. So you could actually glean that information and say, okay, well, maybe CCJ is going to follow suit here. We don't know, right? But, as far as CCJ is concerned, it's still there. And what else I like about this 50% retracement area, by the way, look at all the support we have here. You got the 12 EMA. You've got this anchored VWAP off of this last pivot on the left side of the cup. So, I would look at this as just a pure chartist, forgetting about what's going on fundamentally, and I would say, I'm expecting support here, without a doubt,
Sure, yeah, it'd be the way I'd look at it too, not even thinking about the cup and handle, is just that, you can just see, right, before we had the big push away a couple of weeks ago, the area between the 50 and the 61.8 61.8 was just the area where the market kept topping out, and now as we break through, it's not unlikely that old resistance, very simple, becomes new support before we move on.
And by the way, that's what we're looking at right here. I mean, this is, if I put the line in for where people, it's kind of right there.
Yeah.
Old resistance, now support, right? Little couple undercuts. So, but again, now let's just say that you want to put some sort of trading plan on this cup and handle. What one would have to do as an individual is decide, all right, where am I going to say that this pattern is invalidated? Because it could get invalidated down here, but you still have a ton of support. But I will bring you to the daily here, because this is when you start to zoom in, right? Just because we have a good pattern on the weekly, you've got action here on the daily that is starting to say, hey, the bulls need to be really cautious here. So every day it's a pop and fade, right? Those aren't the greatest signs. The volume has just come down tremendously, right?
Yeah.
And we're starting to breach this EMA, the 12 EMA, that was acting as support. I mean, it's just, you can just see these things. And this is why I like EMAs, right? Because they're not arbitrary lines that people choose to draw depending on what book they read that day. This is all mathematical.
Yeah.
So it was a full rider, and now it's starting to take that out. So that could say, all right, well, maybe I wanted to play this weekly cup and handle, but now that I'm looking at the daily, maybe I want to sit back and see how it plays out.
Yeah.
So, I mean, these are all considerations that any one particular person is going to make. Now, anyone can say whatever they want about CCJ and the management and the fundamentals in their contract book. I don't care, because it's the most liquid name in the sector. It's the name that's going to attract big money. It's the name that's got one of the best option chains in the sector. It's just that simple. So when money wants to flow into stuff like this is where it's going to be.
Yeah, I agree. It's the safest vehicle to express your views on uranium, I think. I mean, you're not going to get, maybe the same return that you're going to get on some of the smaller names, but the difference is you might sacrifice some of that return by negating some of that risk in one of these larger names. I mean, the other thing I'm looking at here with CCJ is that, other than the failed breakout, which I sort of highlighted a couple of weeks ago, how there was big volume as it broke those tops and it's failed away from it, but it's really struggled to to find its feet since, and it looks pretty soggy. And as you said, as the volume goes away, I wonder how many people are still stuck long on that attempted breakout that's failing. And now we're in that sort of choppy range it's almost like an upthrust above that peak, right, when it broke those highs and rejected straight away. And as you said, now it's even losing the EMAs as well. It just looks a bit soft to me. It looks a bit soggy. So I'm kind of looking at it and thinking, well, there looks like a better than likely chance that it is going to come down and test some of those areas to set up the bull flag or the side of the cup and handle. But in saying that, I don't know. I mean, my view is, I kind of looked at the price action over the Asian session on Friday. The market really didn't last very long on that whole risk-off scenario. I'm kind of expecting a pretty strong start to the week across all the stocks. So, with that being said, maybe we are going to hold here, and maybe this is the bull flag, that the completion of the bull flag, and maybe what we're going to see is that cup and handle scenario actually play out this week, and the market's going to break away high. I mean, we don't know, of course, but I think the point being is that the formation's there, right? It's just there, and we are getting that sort of sideways flag action that you would expect. So that's kind of where I'm sort of sitting with it. But it's a very neat formation. I think it's, as you pointed out, and thank you for doing so, it's just about understanding your risk points around how you're going to trade it. Because I think the other thing we've got to think about is, okay, if this proves to be a cup and handle and we get the move away, well, how are we going to manage? Like, is there a technique of the price of the cup and handle that we might use into the future. Is there anything in
Yeah.
there that you would see that you'd think, okay, well, price has moved, maybe the whole range
Well,
of the cup, and that
so
might be a profit
yeah,
point.
with these flags, the measured move is supposed to be the symmetry of this pole into this consolidation. So what is this pole here? Let's just say for simple math, it's $39 to, so let's just say 52, right? So that's $13.
Yeah.
So what you're supposed to measured move expect is a $13 move up off of the consolidation.
So a 1-to-1.
Yeah, that's kind of how I don't necessarily play things that way. But does that 13, that you need that 13 measured move implies that it's going to get past its all-time high. Um, most people in the space that are playing Chemical, we all kind of believe that it should take out the price action over the past couple of years indicates that it should at some point take out this all-time high. When it happens, don't know. If you adjust for dividends, we've already taken out the all-time high, right?
Yeah.
So I don't necessarily do adjusting for dividends, especially in a name like this. I might do it with like REITs and whatnot, but there are people who do that. So it's understandable. The other thing that you have to be aware of that I was drawing this arrow, to the downside, you do have a gap here. And I remember you did a gapped video at some point, right? And you did some statistics on it and whatnot, if I recall, on your channel.
Yeah, I did. I took it off the COVID low because obviously every bull gap got filled prior to then because the market went from $60 to nothing. But since we've really started rallying since the COVID low, it's something like 80% of all gaps have been filled. So, that's not a guarantee, but
No.
the odds still do favour that this gap gets filled. Now it may not get filled in the next, it might take years to get it filled. I think I found one gap, but it took like 10 years to fill it, but it did fill.
Yeah.
So there's no guarantee that will fill, but obviously the longer we move away from that gap without it being filled, the less chance it's going to be filled, which is kind of self-fulfilling, of course. But yeah, statistically, I think you just suggest that would be a bad place to stop out. You know what I mean? You'd want to stop out well before that gap or well after it.
And by the way, the gap.
That would be not a bad place to target an entry if you were just trading this, I think.
And by the way, this gap, I mean, on the fibs, it's right here at the golden pocket too. So, if I'm being an aggressive bull, which I probably am with CCJ, as long as I start to see some sort of life in everything else, like broad markets and whatnot, I have no problem taking a low risk play off of this level here. So it's a pretty strong level where if it breaks down, you're probably wrong, because when this level breaks down, it really takes out the bull flag, the cup and handle potential as well. So there's a lot of things that happen if that level gets lost. So I would be cognizant of that, so you have some things that are working in both directions, and it's just that simple. So and to the effect of what you were saying, that other names might have higher torque. Yeah, if you buy them, you hold bags and you sit in them, but it's not too hard to catch a good turnaround on CCJ and buy some 2 to 3 month out option calls that easily get you 200-300%. I've been doing it all throughout these runs. So just because people think that you can't get that type of return out of this type of market cap name in the space, you might want to rethink that.
Yeah, for sure. I mean, I still remain bullish. I just like the nuts and bolts of what the market's doing in the middle, but there's still nothing to suggest that we're not going to go higher. And I just worked it out on my screen, which you can't see, but that 1-to-1 move would take us up to about $60. So, I'm not saying that's going to get there, but that would sort of tick a lot of those boxes that people are looking for, the fresh all-time highs, etc., etc. But it just feels like there's still a little bit of water to go under the bridge before we get there. But
Yeah, I
these
mean,
formations
like
are
I
there.
said, on the daily, these upper wicks, these pops and fades are starting to get concerning. But at the end of the day, this thing is still holding this level here, this $46, $47 level. So, if I'm truly aggressive and I want to be tight with my stops, I can make a play here against 47. And if it breaks down, I'm just wrong and I know it. And I can get out kind of, small loss, low risk, and then see how the action plays out as it starts to test these supports here. I mean, that's the way I'm looking at it.
Yeah.
And this could have been like your little up thrust, Wyckoff-esque type of thing. Now, I'm not a big Wyckoff guy. It takes a lot of time to study that theory and know how to put it into operation.
Yep.
So, but there are similarities. I posted something on Twitter a while ago that this weekly could look like Wyckoff distribution. It could, but who knows?
Sure.
I'm still sticking with this weekly cup and handle pattern with this bull flag. It's holding for me. I'm happy about it. If this weekly level breaks down, I got to rethink everything.
Sure.
That's just the way I'm seeing it.
Yeah, I'd agree. Yeah, I think it's, you've got your plan in place if it goes wrong, but there's no reason to not remain optimistic as to what we're seeing here. So, I mean, let's just run with it. Let's just see what happens over the next couple of weeks, see how this thing pans out. Like I said, I think this week, as long as nothing else happens in the Middle East, I think we're going to get a reasonable market reaction back the other way. I mean, the bonds and the rates are a little bit of a problem, but, I think things are still looking good. So, mate, thank you very much for coming on today. I really appreciate your time and sharing your expertise on cup and handles. Hopefully everyone's got a little bit of something out of that. Put another little tool in your toolbox.
Yeah, and just as a little side note, next gen, again, one of the leaders in the space, regardless of what anybody says, this thing's cup and handle psychology, very similar to CCJ, right? This is breaking down already. It's closing below the 50% retracement here, so it's something to think about. So if next gen starts to jump off of this golden pocket, maybe someone's got maybe I'm looking at CCJ after that, right? So it's got this weekly rider, but here's your volume profile holding it a support. So keep an eye on next gen and keep an eye on UEC because they have the liquidity. They have the option chains. They're on the big board. Those three names, hand in hand, are going to move relatively together.
Yeah, I'd agree. Good tip, good advice. All right, mate. Thank you very much for coming on. I really appreciate your time. Let's do this again, brother.
Yeah, Benny, thanks a lot, man. Enjoy your Monday workday.
Oh, yeah, I can't wait. Thanks very much, Chris. We'll see you next time.
All right, brother.
Bye, everyone.
See ya.